Welcome to Creative Real Estate Investing Strategies. We got two guest speakers, Mike Cappello and Gregory Crane, and we're going to be talking about subject to lease purchases, owner financing, and novations. Good, Dalton? Awesome.
Sweet.
Corey, you ready to get started?
Absolutely.
Let's do this
Sweet.
thing.
What's up? How's it going?
Where's our stuff to give away? Where's it hide?
Our books
There?
at the back.
Hey, can you grab that box of books?
The blue ones on top next to the water bottle.
Yep, thank
Por
you.
favor.
Thank you. All right. Corey, what's Grid?
Yep, absolutely. So Grid is a global real estate investing community that we like to bring together here to these hyper-local events. So Justin and I get the pleasure to help facilitate this conversation, this community here in Knoxville. We like to say we are not gurus here to pontificate on high. We are just real investors doing real deals in real time, here to share our experiences with you, and we're going to trust that you're going to share your experiences with us and the rest of the room so we can all grow and learn together. Sound good? Awesome.
Is everyone awake? Does that sound good? Thank you. Yes, this is a participatory event, so we're going to run this town hall style. So please, if you haven't been before, we want you to talk. When you do talk, we're going to put a mic, and the reason we put a mic on there is if you're doing anything, if you're looking to attract on social, the most important element is not the video. You can get away with just your phone. It's the audio. If you've got crisp audio, people will watch anything. If you ask an amazing question and we don't capture it on the audio, it totally misses out. We record all of these, we put them all on YouTube. So please, if you're asking a great question, that is a great way to build social capital. It's a great people to connect with you afterwards. Hey, I want to do a deal with that smart guy that asked that question,
That's right.
that smart woman that had that insight. So
Well, and oftentimes, right, somebody else is thinking that. You need to be the one to ask it. It'll help benefit the entire room by doing that. So
Love
please
it.
help participate.
Love it. Do we need some seats for these? Jake, can you grab a couple extra seats for the...
Thanks, guys.
Yeah, so everyone doesn't have to stand the whole time. Thank you. Love it. All right, our mission at Grid is to build a network to help 1 million people get financially free. This is a global investment network on a trajectory to open 1,000 locations. So we're looking to connect with like-minded people to build wealth and create impact in real estate. If you're walking in, grab a drink, grab some food. We're just getting started. We're all friends here. Corey.
That's right. We are lifelong learners, right? This is a room full of all experience levels. There's folks that are brand new in here, maybe have watched just a lot of HGTV, a lot of shows, have always wanted to get into real estate investing, flipping a house, etc. And there's folks in this room I know personally that own hundreds, if not thousands of doors, right? This is a room for everybody to collaborate, learn, and grow together. We like to keep a white belt mentality, if you will, right? There's always something to learn in a room like this.
Speaking of owning thousands of doors, if you haven't met one of our sponsors, Kristen Lay, Jacob Lay Property Management, they manage 1,100 doors. And I've known Kristen since she first started that business. It's been really impressive to watch her grow that. Really, really sharp business owner. Definitely somebody, always owned businesses from the first time I met her. Definitely someone to have in your network. Cool. All right. So, real fast, like to thank a couple of our sponsors.
Yes.
Okay, Admiral Title is one of our sponsors. Admiral Title, we moved this event, so it coincides with an employee appreciation event. They're not here, but Admiral has been in business. They celebrated their 25th anniversary. They've got 7 attorneys on title. We've been using them for years. They do a great job. I want to thank Foundation Mortgage for hosting us. I don't know if Christian's still here or Morgan. They do a great job. Thankful for great space. Choice Home Warranty, Marianne Azambuja. She'll be there at our Grid Coffee. We're doing when's that Grid Coffee, Corey?
That's going to be next Thursday morning is going to be our next Grid Coffee event. So for those that might not be able to make this kind of event on a regular basis, we're liking to add some extra pop-up events during the month. So there's a coffee meetup next Thursday morning. We'll be putting the details out there. Be able to come out, get together with other investors, share a cup of coffee, network, have a good time.
Awesome. You want to give some stuff away before we introduce ourselves?
I do, actually. I always like to reward, give back, right? So first off, I'd really like to see, just curious, who traveled the furthest?
Who thinks they traveled the furthest?
Who thinks they
to get
traveled
here?
the furthest to come
We
here
had someone
tonight?
come from Italy one time.
Yeah, that
which
was wild.
Which was
yeah,
wild.
that was wild.
It was like, okay. So, California. Where in
Ooh.
California?
Yosemite.
Yosemite. Awesome.
Right.
Welcome.
Wow, welcome.
Renovated school bus with children and no AC.
Wow.
In a renovated school
Brave
bus
soul.
with children.
Oh, my
and
goodness.
No AC.
yeah. Give it up. Oh, my
This
goodness.
is, if anyone like John Steinbeck, it's in reverse. It's like the Okies going out west. I love it. All right.
No, that's right. Wow. So,
Excellent. We got a book for you. You wanna? We can run this down so she doesn't have to get up there. Sean, you got us?
Thanks.
Thank you, Sean. We appreciate you.
Wealth Without Cash by Pace Morby is what we're giving out today. We're talking about creative finance. So, next one.
All right. Who thinks they've been to the most grid meetings? Who's been to 5? Raise your hand if you've been to 5. Who's been to 6? Who's been to 10? Who's been to 15, you think?
Zach's been coming a long time here. Zach,
Yeah, Zach. I love Dalton. Yes, Dalton. We got an extra copy for
camera guy.
Dalton. Yes, Dalton wins. You got one here for Zach. Thank you, Zach. Love you, buddy.
Yeah, you too.
If you don't know, Zach is an investor. Zach's got a great business, Done Right Holloway. Right, it's been really cool watching you grow and scale that business. Right, yeah, it's awesome.
Billboards out in the parking lot, so.
You brought it? Yeah. Fantastic.
Hell yeah, that's awesome.
All right, who are our new people?
Yeah, show of hands.
All right, we got a lot of new people.
Love that.
All right, so get on your feet. We're gonna fight. All right, what's gonna be the easiest way to do? You know what? Who thinks they're the youngest new person here? How old are you, Alex? Oh, I love it. She's got her hand in the back. 24. Anybody new that's younger than 24? Yeah? 18. She got you beat, Jay. So this is Natalie. Say hi to everyone, Natalie. If you haven't met Natalie, Seth, and Brian, stand up. Say hi real fast. They have a pressure washing company. So if you need pressure washing, which you do if you're an investor, it's one of the easiest ways to pretty up your properties.
100%.
Yeah, like don't skip curb appeal, guys. A lot of investors fumble at the end.
100%.
Get their information. So glad you're here. Fantastic.
Yeah, that's cool.
Corey, who are you?
That's cool. Who am I? So, I'm Corey King. I'm an agent investor here in Knoxville. I've been an investor in real estate since 2009. When I bought my first property, I was 22. Started house hacking, just AKA roommates, right? That allowed me just to start offsetting that initial mortgage, start saving some cash, and started kind of rinsing and repeating going on that journey. I had a restaurant business through my 20s. That was really kind of my main source of income. So real estate was the back hobby. Got to sell off a good chunk of that business, relocate here, jumped into the agent investor thing full time, and have been doing that ever since. I've had the, like I said, pleasure, but ability to kind of foster this community.
What's that look like the last, so you've been here 4 years?
6 total.
6, and how long have you been an agent
5
for?
in the
5,
business.
because you were came back here and you were waiting tables and worked at Earth Fair, right?
That's right. Yep. So then got here just into the business full time in 2019, and just continue to, I guess, work and grow and scale that now.
And so what does that look like in 5? And I just want to hear this because this is like, you know, I got a different story. It's a lot longer, but what have you been able to do in 5 years? How many houses have you sold?
Yeah, so I've sold right about 250 houses over that time, which has been really cool.
And you've been able to build a
really nice rental portfolio.
Yep.
We've been able to retire the misses about 2 years ago, which was cool, just from that passive income, just through consistency, just picking up a rental. I always like to I buy most of my stuff right off the MLS as well, too. So if anybody says there's not good deals on the MLS, it's not true.
Yep.
In fact, most of my portfolio, in fact, has come right off of the MLS.
I just want everyone to hear this, and that, like, Corey came in, right? Corey just obsessed, watched some video, started calling FSBO, started calling expires, bought a primary, moved to another one. Malachi, we were talking about that. Turned that one into a renovation project with a baby on the way, which is, you know, semi-advisable.
Yeah, I always seem to find my craziest projects right when my wife's like 6 months pregnant.
And so just we overestimate what we can do in 1 year, but we underestimate what we can do in 5 years. You can totally change your life if you're sitting in this room in 5 years, if you just start taking some consistent action. I mean, so just want to share that with you. Like, it's totally achievable. You know, like, the best time to plant a tree is 20 years ago. The second best time is right now.
Today.
Right? So my name is Justin Myers. I am the Director of Expansion for the Grid Investor Network nationally. We've got 30 locations around the country. We're opening 30 more here this year. which is a real distinct honor. I started in real estate back in 2005. I was a mortgage broker down in Tampa just in time for the market to explode. And so that led me to like playing musical chairs. I went and worked on the residential side to make money. Then I worked for a property manager. Then I thought it'd be a good idea to get divorced. So restarted life. Like there's a pattern here. I make good decisions. So I moved up here, started a transaction coordination company in 2010. So I got to learn the real estate, the residential side, the commercial side, the auction side. Got to negotiate a bunch of short sales out in the Smokies because there's all kinds of fraud in that market. Knoxville was pretty immune from that market. People here didn't lose their mind, but the Smokies were full of appraisal fraud and mortgage fraud and a lot of people, walking away, A-rated buyers making a rational decision to walk away and do cash for keys. I worked with someone that walked away from a portfolio of 16 properties. They moved to Belize, hit all their income.
Wow.
It was really interesting. So we run this group because we believe in community. We do a lot of things in the community. We've got some other initiatives, happy to talk to you about Pints for Purpose, ask us about that. What we're looking to accomplish is this. If you're brand new, we want to take you on the journey, right? We believe that one of the most important things about being an agent is we have a fiduciary responsibility. It's the highest duty recognized under the law. It means if you're talking to us, we've got a legal and an ethical obligation to put your needs above our own. So we love agents. We got some agents in the room, raise your hand, right? There's a reason why they're here, right? Real estate agents, and I've gone on a full 180 on this. When I was a mortgage broker in Florida, I was not too impressed with the quality of real estate agents. It was like The Big Short. It was ridiculous. No one had a license. It was insanity. Now they've been doing it a long time. Some of the best people I know are real estate agents. The most ethical, the most fun, right? The most giving people that pour back into the community. So we're here to help you if you're new. And if you're experienced, and I see some real experienced people back here, we're here to do business with you. Let's do a deal. I'm glad you guys are here. Excellent. Ready to get started?
Absolutely.
Fantastic. And you can connect with us, Grid Knoxville, on everything. Social, Facebook. Join our Facebook group, Grid Knoxville Investor Mastermind. Do that before you leave. All right. So who here currently is an investor? Who owns some doors? Fantastic. Okay. Who owns short-term rentals? All right. Cool. Look around, Michael. Take a look. People raising their hands. Keep them up. Michael wants to connect with some short-term rentals. Some other owners as well. He owns one himself up in Norris. All right, cool. Who owns a single family? Right? Who owns multifamily? Let's see. Rashid over there raising his hand. Sean owns lots of multifamily. Cindy, all right, fantastic. Cool. Corey, what do you want to know?
Good people to connect with. I definitely wanted to meet more of my multifamily people. That's certainly my next venture.
Really quick?
Yes.
Does anybody own mobile home parks?
Does anybody own mobile home parks?
Used to.
Yeah. Good question. I love that. Who's got capital? I'm looking for $50,000 for a down payment. Who's got some capital? Steven's got capital. Anybody else got capital to deploy? Nathan does. Okay. And then Cindy. 3 people. Awesome. So 3 people got. Let's swarm all of them.
Yep.
Who's got a deal to move tonight? Who's got something that makes some sense? I do. We. Raise your hand. You've got a deal. Awesome. No, you're all good.
Yeah.
You're all good. Fantastic. Awesome. Who's looking for something really strange? Okay.
Well, we're looking for businesses that cash flow with real estate.
Looking for businesses that cash flow with real estate. Cool. Let's talk. Yeah.
Cool.
Senior commercial real estate agent. Michael, what's up, man? What are you looking for?
I'm looking for a property with a cave.
Looking for a property with a cave. Which you think, considering that there's more caves, if you don't know this, in the U.S. than anywhere in the country. Tennessee, sorry. That's more caves in Tennessee than anywhere in the country. However, I've only seen that like one time. I sold this weird, crazy property, like a bat cave out in like Jamestown.
Cool.
So interesting. Okay. Not like a bat cave, like Batman lived there, like a cave full of bats. All right. Excellent.
No, that's cool.
Ready to get started?
Yeah.
Cool.
Yeah. Let's do it.
All right.
Legalese.
Important legal disclaimer. investing is not a no-risk enterprise, right? We should not be investing with money that we can't lose. That's why we talk about collaboration. If you're new here and you're making a move on a deal, like, please get someone else to look at it or work with an agent, right? Don't be self-represented. Like, get someone to help you on this first deal before you go into a bad deal. We don't want to see you make a bad mistake. Who here would look at a deal with somebody and give them there's some feedback on it? Right? A lot of people look around, grab somebody, don't do it on your own. So we're not lawyers, we're not attorneys, we are not home inspectors, we are not tax professionals, so trust but verify the information, don't sue us.
Yep.
And we're recording this, so.
Cool.
Let's talk about creative financing, Corey.
Yeah, that's right. So we're going to be talking about like three things tonight, right? We're going to be looking at subject to, we're going to be lease options and owner financing. These are really three powerful tools that you need to know and understand. At the end of the day, we're in the business here of solving problems, right? Someone has a problem, you've got a distressed seller, they have a need. The more tools you have in your toolkit to be able to solve those problems, the more people you're going to be able to help, right? So creative financing is really one of those channels that you can help people solve their problems at the end of the day.
Yeah, and just, if you're new, go back and watch our How to Identify Motivated Sellers. Because I meet people and they say, hey, I'm looking for a subject to property. And it's like, cool, what does that mean? You know, I don't know that this property can go subject to until I've gotten to relationship, until I found the distressed property, right? There's not just a whole list of people with their hands raised that, hey, I'm open to owner financing or creative financing. Mm-hmm. So I still have to learn the basic block and tackle of how to identify a motivated seller. They're either going to be motivated by circumstance or emotion, right? And how do I present myself as somebody who's here to solve their problems because they're motivated by emotion. They want that house out of their life. And if they're motivated by circumstance, we're having like a rational conversation about how are we solving this problem. But they're two different sides of a coin.
Mm-hmm. That's right. Right. So
what's owner financing?
Owner financing, right? In short, really, owner financing is when the seller is the bank. They are the ones funding this transaction. They're financing all of it or some of it, but they're the ones you're going to because they own this property outright, and you've got the ability to talk with them directly, much the same as you would talk with your bank to negotiate some terms. What's really cool with that is you can get really creative around how you structure those deals. So, some of the pros.
Well, it's a quick way to close, right? We don't have a mortgage company involved. Depending on, you may choose or not choose to get an appraisal, so you can move quickly on a property because you don't have to go get underwritten. You got an ability to purchase a home. They're not probably looking at your debt to income ratio. They're not as concerned about the foreclosure you might have had or some of your adverse credit typically. And you've got lower closing costs. You're not paying origination. You're not paying points. Those are some of the other benefits.
Yeah, I was going to say that's be your big one right there. Is just saving on some of those origination fees, points going into it. Again, it's all on how you structure the deal, right?
Why would a seller do this, though? This is interesting. Is anybody in here participated in an owner financing transaction? Sean has, Nathan has, Mike has. Mike, what was the deal?
I've done a couple. I've done one where it was a sub-2.
Yep.
On a short-term rental in Sevierville, and then one where it was a owner financing house in Sevierville as well.
So Mike said he's done a subject to and an owner financing. What were the terms that the seller did on that owner financing?
The owner financing, I believe they put, I think it was like a $400,000 house. They put 80% down, and they actually leased it back out to the sellers for 8 months. It's actually going to be coming up in October.
So they put 80% down.
80%, 80,000.
80. Okay, so $400,000 house. They put 20% down. They did a lease back to the sellers. So that's kind of an interesting strategy. It sounds like there was a little mutual benefit there. If you don't know, Mike Durham works for Your Home Sold Guaranteed. Mike does about 40 deals a year. He's done a lot of cabin deals. He's somebody that I call when I have some questions. Good guy to talk to.
Great
if you're
resource.
interested in short-term rentals. Why would a seller do this, Corey?
Yeah, well, certainly speed. Number one, again, like we just talked about, pros for the buyer, like the speed and convenience of it all is always nice. Seller can spread out that tax liability over that whole stretch of time over the deal, right? Instead of taking that one hit right at once, they can stretch that out instead of maybe taking the $200,000 right now as a payment, they can maybe stretch that out, and they're making $1,000 a month, and that's $12,000 a year, and that's a lot easier just to write off, right? I can hide 12 grand on my taxes a lot easier than I can hide 200, right? Seller can certainly command a higher price and an interest rate compared to the market, so they can either go higher, or in this case, you can probably negotiate a lower interest rate and might go higher on the purchase price, because we know that we're in a strongly appreciating market, and likely if you've got something stretched out over 10, 20, 30 years as a note, you can typically go higher on that purchase price because you know that this market's only going to continue to grow long term. Real estate never goes down over like a 10-year period, right? You're going to have dips, but that track over time, that long period, is always in a positive direction.
Don't try to time the market. It's
Don't try to time
100%
the
true. To be clear, the real estate market's never been down over a 9-year period, and the stock market actually. So if you're have the ability to ride this out, now you might have a challenge if it blows up when you're looking to retire or something, and man, it's 2007 and now I have to ride this out. But yeah, long term it makes a lot of sense. Check this out. If you don't have this financial calculator, 10BII on the App Store. 10BII, you can calculate payments. It'll do amortization tables. If you want to get into creative financing, you need a tool like this, and you need to just play with the numbers again and again and look at them and adjust the term. I'm looking at a deal right now. They're selling it 20% above market value with a 0% interest rate. 15-year amortization. It seems to make a lot of sense to me because I'm going to hammer down the principal, but I might be upside down in that property on paper for the first 2 years. What's that? 10BII. 10 BII. 10 BII. It's going to show like 10B financial calculator. That thing is fantastic. It's one of the most used apps on my phone. So why would I want to do this? So let's talk about tax liability, right? If I have a lump sum, I'm paying capital gains tax. My tax experts in the room, how much is typically going to be capital gains tax? 25, 30%? Is that accurate, Nathan?
20 to 23.8 if you have an NIIT on that as well.
This is why I asked the room, because you hear that 20 to 23.88.
But it depends on the state, correct?
That's federal.
It's federal capital gains tax.
But then you also have state salary too.
You can,
Depending
in some
on the
states,
state.
but not in the great state of Tennessee. Well, what's NITT?
If you make a lot of money, you get to pay more taxes.
Okay. So just different tax brackets. So anyways, you're going to pay, what's Nathan do?
An accounting firm.
Yeah. Nathan is just really sharp. I talk to Nathan. I will talk to Nathan often. We'll be the last ones here talking for an hour. You should talk to him. He's one of the sharper guys in here. No offense to anyone else. We've gone really, really deep many times, like about some really cool stuff.
100%.
So you got capital gains tax. Now, I don't have to pay capital gains tax. I have to pay ordinary tax if I just turn this into a note, right? And I'm getting income coming in there. So that's one way to offset it, right? Where I can avoid that. The other one is we can negotiate on terms and get a higher price. And just, has everyone seen an amortization table? Does everyone know what an amortization table is? If you haven't seen one, right, an amortization table is just how your mortgage is amortized over 30 years. Those payments are spread out. So if you look at your amortization table, and you can go look one up online, the majority of what you're paying at first is interest. So when you look at what you're actually paying on a home, you bought a home for $365,000 at 7.25% interest. You paid $900,000 over 30 years, right? So that's what you're actually paying over the lifespan of the loan. So one of the reasons why I might want to owner finance is maybe I want to give them a lower interest rate because I want them to keep this, because it's a way for me to sell this home for not $300,000. I could sell this home for $500,000 because they keep the payments for so long. I'm making more money than I would make, and then eventually they've got to pay the thing off anyways, right? I become the bank on this. So it works exactly the same. You get a note, you record it. We'd recommend. Do you want to talk about servicing companies? Or I can fill that
Go
part.
for it.
So if you're going to owner finance, let's talk about the practical reality of it. You can get a third-party servicing company, right? You know how when you anyone bought a home and seen like now your payment has to go to somebody else the next month, right? That's because there's independent servicing companies. There's origination companies that are doing these loans, and they're packaging them and reselling them because they're creating bonds and instruments, securitized instruments out of those. And you can go directly to one of those smaller mortgage servicing companies to produce independent statements for your borrower. So that's what we do. If you want to professionalize that, you can report it to credit. You can go directly to a mortgage servicing company if you decide to owner finance. Any questions on owner financing before we move on?
Does it have to be that the owner doesn't, that there's no mortgage?
Does it have to be that the property is free and clear? Can you owner finance with, Nathan, can I owner finance with a loan in place, or would that trigger like a due on sale clause?
Like, you want the answer for tonight or the real answer?
The real answer.
The real answer is it depends on how you structure it. If you structure it correctly, it will not do a due on sales clause, but it will hurt you for your next purchase. If you do it incorrectly, they can call it, and
Okay.
you've been seeing them call it recently.
Corey, what's a due on sale clause?
Oh, the boogeyman, right? So in your loan origination, just in your loan documents, there's always going to be in tiny print, what's called a due on sale clause, which would mean that if the bank sees that there's been an ownership transfer in there, they can call the note, right? So that's always the big boogeyman. We'll talk a little bit about that tonight when we're diving here into like subject to things like that, because that's always considered the big bad, wolf in the scenario of what happens if the bank calls the note, right? So we try to do some things to avoid that. It's everybody's big fear, but it's really just that. It's the bank's ability to call the note if they see that the ownership is transferred on the deed.
So to answer your question, I wouldn't say you have to, but the vast majority of them, the safest option would be usually when I see owner financing, when someone owns it free and clear. If you're trying to do it with financing in place, there's just a higher level of risk, and I'd want to talk to an expert that's actually done it already, which would not be me. That's someone, hey, how did I do this? How did I structure this? Like, what are the entities I put into place to protect myself? Great question.
And those are just going to be your scenarios that we're going to dive into as far as your lease options, right? Or your subject to, is if you're looking to just can take over.
Yeah,
at
I'd
that
say
point.
an lease option is very much like what I might look at in that instance, which can do a lot of the same things. Cool. Any other questions?
No,
cool.
Straightforward. Yeah, let's dive into just kind of a quick example.
Yep. So let's take a look at this real quick. I know we can all read, so we don't think we have to read the slide to you. This is an example of an owner financing deal. Does this one come from Rob?
Yeah, this one came out of them.
Okay.
Directly.
So this one comes from Rob that started Grid. He's been running his chapter for 17 years, right? So what he did was a 5-year.
Yeah, as the seller, right? I've got a property owned completely outright, got multiple offers on it. You could take one that's a higher offer, 20% above, and be able to offer out some different terms on there.
Yep.
Take the attorney, they're going to draft up your promissory note. Buyer puts down 20% down, you agree to finance the balance for 5 years at 6% interest. It's amortized over 30. So that payment is going to reflect as though it was amortized or financed across 30 years. But instead, we're going to have a balloon on this, meaning it's going to be due at that 5-year mark, right? So just because you're owner financing something doesn't necessarily mean that you're locked into a 10, 15, 20, 30 plus year term. You can amortize it over that, but you can certainly put language in your contract
Sure.
to have that balloon or end at a certain date if you're looking to get your funds quicker, but you don't need all of it right now.
So even some of those, like they started to come back, but a 40-year loan is not really a 40-year loan. It's amortized over 40 years, but the balance is due in 30 years. So often when you're using owner financing, you're going to see some sort of a balloon, right? Hey, we're going to amortize it over this longer period of time because the 30-year mortgage is like God's greatest gift to real estate. Most countries do not have 30-year fixed mortgages. Very unique in that we have them. It's why we all can realistically, become real estate investors. Even just laddering ourselves up. But yeah, so most of those are going to have some sort of a balloon, 3-year, 5-year balloon. Typically, we're going to see those. Awesome. A promissory note. If you've bought a home, you've all seen a promissory note, right? The note is what attaches the mortgage. So a mortgage is just a legal document that lays out all the terms of the repayment, right? That's going to lay out the amortization table. It's going to talk about if you default, all of that other stuff. The note is what attaches the mortgage to the deed. Does that make sense? Say yes. Cool. Are we losing you enough math? You want to go on to something more fun? All right. Cool.
Cool.
Subject 2.
Sub 2 or the sub 2. right? For Pace Morby people. So buying a home subject to means you're buying a property subject to the existing mortgage in place. This is a perfect example for, well, hey, how can I finance something if there's already a mortgage in place? This is going to be your strategy to do so. So essentially, the buyer is going to assume or take over the current mortgage payments in exchange for the deed or control of the property.
Why is this exciting? So why would you guys want to do a sub two? Malachi, what do you?
Distressed owner.
Distressed owner, yeah, I love that answer. Yes, Jake.
For the buyer, you could get a lower interest rate probably.
Buyer can get a lower interest rate. Yes, this is a time machine, right? I can travel back to when they were giving away free money. You know? Yes.
Usually a lot cheaper to get into.
This is usually a lot cheaper to get into a subject to, right? Yeah, it says. What's that?
You can have bad credit.
You can have bad credit and get into a subject to. What's that?
You won't have a mortgage on it, on your record.
You won't have a mortgage. That mortgage won't necessarily be recorded in your name, so it's not going to count on your ability to purchase. What's really exciting, I wish we had included a slide of an amortization table. So one of the things to think about when you're looking at your mortgage is initially a very small fraction of what you're paying is actually paying down your principal. One of the most exciting things about subject to loans, even if you got an interest rate that's similar to today, is they're 7 or 10 years into paying that thing, so you're hammering down the principal. That's what's really exciting about a subject to me, is that principal buy down, that equity, it's directly increasing your net worth every single year, right? And real estate is fantastic because I can go, there's nothing else that I can think of where I can go borrow against the equity, pull $100,000 out without paying taxes. It's not a taxable event. So the whole point of owning real estate, right, is it's a tax avoidance strategy. That's one of the biggest reasons to own real estate long term, are just the tax benefits of it are tremendous.
Absolutely.
Yes, Laura.
How would you seek out a sub two?
How would I seek out a sub two? I would cast a wide net. I'd be looking for distressed properties. If I was specifically looking for sub twos, I might go and look at purchase. I'd probably be filtering my list based off of purchase date. So I'd want something that, they've at least owned it for 5 years or 10 years, depending on what my strategy was going to be. But that's how I'd filter that out is
What type of person would be interested in that?
well, just the type of mortgage that would be advisable to me, and then just try to talk to as many people as possible. What do you think, Corey?
Yeah, during that time frame, really. I mean, I say just nailing it as far as the time machine is a perfect example in the fact that you just kind of we know where rates were at one point in time, and so by finding people that bought during said point in time is a solid position.
Yeah, Sean. Here.
Yeah, I don't.
And then we'll go.
One way you can find those properties is through a product called like PropStream, and what you'll look for is properties that either have very low balances on them or paid off, and they're in bad shape. So people do things like they drive around and look for properties where the lawn hasn't been mowed, or they find out if it's got, the cities put, some kind of thing out where they find them for bad properties and what have you, and neglected properties that are like got almost no money owed against them or nothing. Those are the ones that a lot of those people go after.
So PropStream. So we're doing PropStream, and so we're doing like 2 filters there, right? I'm looking for like code violations, and I'm also looking for like a date range as well. Danny.
Yeah, when my first one I did 25 years ago, I watched the foreclosure ads. In Tennessee, you're going to look for substitute trustees. When a substitute trustee is being assigned, that is a sign that they are about to foreclose on somebody. The address is in the ad. Go knock on the door. Be persistent. Sometimes they won't talk to you. They're in denial. When you find someone who will talk to you, you tell them, I can help you. I want to buy your house. In the process, we're going to leave the mortgage in place in your name. I'm going to catch it up. I'm going to have some documents that let me talk to your mortgage company. You're going to not have a foreclosure on your record. I'm going to catch your payments up. A few months of on-time record of your mortgage payment. It's a win-win if you can help them and if they'll talk to you. But you can look for pre-foreclosures.
Thank you, Danny. That's great. That's actually what we're going to be talking about today. Mike Cappello came all the way from Virginia, so we got a specific example, and that is one of the reasons why they were able to take down a subject to was exactly that. It was someone that was behind, so not only did it get him out of that, but it's also, hey, we're going to help repair your credit and have a positive trade line on there. That's what was in their interest. So Pros for the seller, Corey.
Yeah, solves a problem they got. They're distressed, right? They're behind. Gets them the money they need, typically in some kind of delayed fashion. They have to be patient in order to be able to get this example, but we can fix the problem now. And we can help them build back their credit. Thank you, Danny, for sharing that, because you're right. You can help catch that up, help make some consistent payments, help them on some credit repair, and help them be able to move on. You're creating a win-win. You know, we're just here to help people solve problems, and by having tools like this, we can certainly help people do that.
So we've got an example of a subject to. With your permission, what I'm going to do is skip over this, and we'll run through it with Mike when he's up on stage, so we can ask questions, right, and be interactive. Does it sound good?
Sweet.
Cool. Awesome. Anybody have any questions on subject 2 right now? Zach.
What happens if you need, do I need the mic?
You're smart.
What happens if the seller has to file for bankruptcy? What happens to the loan after that?
So this is where we have that disclaimer about me not being a tax professional. It's going to depend on the type of bankruptcy that is filed and whether or not that property is included in the bankruptcy, whether that's something you'd have to consider. So if the property is excluded from the bankruptcy, it's not something. Now, does anyone have experience with this? Because I don't want to speak out of a property going through bankruptcy.
What little experience I have, it will delay the foreclosure. A bankruptcy can delay the foreclosure, but the counter will start up again. It will not put it off forever. You're going to have to make payments to the bank. So the foreclosure will temporarily stop it, but you got to keep going, and it's going to come back around. You don't have to deal with it.
That's right.
That's prior to owning the property, though. I think what you're asking is what happens when you buy the property and then they file for bankruptcy.
Yeah.
My understanding is that.
Here, Mike. How about Mike's coming up now.
Here I am. Specific to that question, my understanding is that they no longer own the property, so they can't claim the property is theirs during a bankruptcy. So it would be excluded from the bankruptcy proceedings. I haven't dealt with it personally yet. Hopefully it never happens, but that's what I understand from what I've heard about it.
Great question.
We take ownership of the property and it's subject to the mortgage stays, but the ownership transfers.
So if you take ownership, like the ownership is gonna, the ownership transfers, the mortgage would stay in their name, but the ownership would transfer. And I don't know. I really would love that answer of like, I imagine it's gonna get messy. The bankruptcy court is gonna wanna account somehow for this income. Yeah, Duke.
Yes. Do y'all see any opportunities coming up, like in the early 70s, where you can pay so much money down and assume a current mortgage?
Do I see opportunities coming up?
Yeah.
Okay. So Duke is asking if we think we might return to the 70s where people were paying money down and assuming mortgages because rates got so insane that no one could qualify, right? We had rates that were in the teens when Volcker was fighting inflation. So there's a really, really high rate. So I see that coming. I think things are going to get real weird eventually. They're not there now. I don't know if it's going to, and I don't know if it's going to happen in Tennessee. So Knoxville, right? We're growing at twice the rate of the national economy. We're predicted to have the most appreciation in the country. So in a lot of ways, and we've got an incredible amount of demand. We have 1,200 houses on the market last month in Knox County. 5 years ago, we had 6,000 houses on the market. So we've got this really weird supply and demand. So I don't know, Duke. You would probably know better than I. You've been an agent for a very long time. Nathan, yes.
Assumptions are big right now across the country.
Okay.
They just changed the fees where servicers can charge a small fee for you to assume the loans.
Here, that's what we will hear, yeah.
Where can you get that off of there?
You have to call the servicer. So assumptions are already big. It's on certain loans, but they've already started trying to do a fee so that servicers can make a little money to do an assumption because otherwise they made no money. So most servicers, Mr. Cooper, I won't name any locals, but they would say you can't assume a loan, but you can just expect 90 days for an assumption or a denial because they don't know what they're doing. But it's already going on.
And it's true, right, Nathan, that all government loans are assumable, including FHA? I know VA loans are assumable. Yeah. Yes, if you qualify for that, FHA loans are also assumable. So.
Sure.
Yep.
Yeah, just really quick, hitting on the risk, right? Like, technically, like, can the lender call on that? We talked about just the due on sale clause a minute ago. Like, technically, yes, they can. Just based on our experience, it's very, very rare that it does happen. Most of the time, if a loan's getting serviced,
I would say
pretty
it's
good.
rare, and I also remember we did this like last year, and our private money sponsor, Chris Davis, was like, I just saw one that got called. So, like, it does,
it does happen. Yeah.
Process of that when it does get called, like, what's the worst case scenario? You lose your down payment and
What's the process when you're going to have to find a way to pay off that, or if you can't pay that, they could take back the asset.
mortgage and then, or you just lose whatever you have.
Yeah.
Don't they make you, they give you 60 days to refinance?
Typically, like,
So the consensus is that it's, for everyone that can't hear at home, the consensus in the room is that it's 60 days that you typically have to refinance that out. Like, they just want their money.
Yeah.
So if you can pay them their money through a refinance, they'll be fine. So the real person
Or
that's
sell.
in jeopardy there is just Mr. Seller. Mr. Seller is the one who has that relationship, who entered into the contract with the bank, the original seller, who would be in jeopardy there of having that foreclosure show up on the record.
right, which I guess we could always sell as you're out. I mean, typically, like, most people
Yeah.
are sitting on a strong amount of equity that realistically you just, okay, cool, I'm just going to sell it outright on the market and move on.
The last one too, you could do a subject to if you just bought a property and it's too skinny. Like for, that might be something where somebody could do a for sale by owner or something, like it's too skinny to pay fees or something else, that you could just assume
Take it over.
assume their existing mortgage and take over their payments. That is another one if someone's like jammed up and they've wrought recently. Okay.
Yep, 100% right.
So how do we, let's save mitigating risk when we get Cappello up here. We'll go through some of those. Awesome. So lease option. Who's done a lease option? I got lots of people that tell me they're looking for a lease option. Anybody done a lease option? Brenda's done a lease option. Awesome. Greg's done a lease option. Were you on the selling side or the buying side, Brenda?
I've done it both ways.
You've done it both ways. Awesome. So why did you lease option, Brenda?
So,
Yes.
well, I just wanted to enjoy that cash flow for a little while, and I appreciate the balance for a little while, and I got a, non-refundable option fee. And then I coached up the buyers to buy the house, and it felt great when they finally
Okay.
put their stuff together and bought
I
it.
love it. So she said, I got to enjoy some payments for a while longer, so I got to get cash flow off the asset. I got a non-refundable fee, so essentially the same as getting a down payment, like on an owner financing. And I had the satisfaction of coaching that tenant up into becoming a homeowner. So it was a win-win-win for everybody involved. So what's a lease option, Corey?
Yeah, it's really essentially that. It's just straightforward. It's like what it sounds like. It's a rent to own scenario on there, right?
Yep. So for tenants, it's a way to work towards home ownership. It is a way to build up equity. Lease options can be really effective because you can structure a lease option in such a way that a portion of your rent payments are counted as a down payment. So it can be a way for me to build up a down payment when I don't have a down payment and qualify.
Yeah, and the last one here really kind of like jumps out at me too, just the ability to lock in your price and terms like well in advance. In fact, that wholesale opportunity we just had out in Hardin Valley, the folks that had been in the home for 20 years, I guess at that point, 23 years, had done a lease option way back in the day. That's why it only recently showed up as folks asking, like, why does it show like they just bought this thing like a year ago? Like on the tax record, it reflected that was because it only just transferred then, but they'd been doing that for 23 years. They'd been in the home, and it only finally showed up 20 plus years later. So it is a great way. That guy locked in his, it was $200,000, I think is what they had purchased it for, but he locked that in 20 something years ago, right? Which that home would have been $50,000, something like that, I guess at the time, right?
Nice.
If he would have sold it then, right?
Who's heard of institutional investors? Yeah, I see some hands raised. Institutional investor is someone, could be a hedge fund, or it could be a private wealth management company that is looking to invest like large scale in homes. I think that the technical definition might be to own more than 100. I think they're debating the definition because they're trying to limit these. So American Homes for Rent is an example of an institutional investor. They'd come in and when I was in Tampa, they bought 1,000 homes. And what they did is you could purchase that home from them. You can go lease that property for them. And the lease had built in an option to buy for the next 5 years with a built-in acceleration of 5%. You would have been a genius to get one of those when we ran into COVID and we had over 10% appreciation every single year. How smart would you feel if you did those? So I think it's kind of interesting is, it can make a lot of sense as a buyer. You can make a bet on yourself and you can wait and see. If the property depreciates, you don't buy it. If it appreciates more than 5%, you're actually buying it below market value in a year.
Which is huge.
So it can be pretty advantageous for some homeowners on the buying side.
That's right.
Why would I want to do it as a seller?
Sure. So I'm going to go ahead and I'm going to be able to pass on my maintenance issues directly on to that tenant/buyer. I'm going to lock in, again, great price and terms. You can do this like well in advance. So we've talked before how you can really set your own market. You can price something for where it's going to be in 20 years by doing it this way. And you're going to be able to collect a nice, sizable, non-refundable deposit right up front. So if they do go default on this in any way, right, it's an eviction and not a foreclosure.
Brenda, can I put you on the spot? You want to come up here? Can I ask you some questions? Awesome. Because I want to talk. Who wants to talk about lease option versus owner financing? Who's on team owner financing? They'd rather owner finance a property. Who would rather do a lease option? Okay. So you've done both. If you don't know, this is our friend Brenda Price. So Brenda teaches people. She's an instructor with Note School on how to owner finance and how to create notes.
That's correct.
Yeah. So can you give us a compare and contrast for owner financing versus lease option?
Okay, so that's a long class, but I'll short version.
Why would I?
So if you're
The short version, I'd say is, well, let's set the stage. You can write a lease option in such a way that it gives you a lot of the protections of an owner financing in terms of really transferring responsibility onto the tenant for the maintenance of the property.
That's true. So with a lease option, you are not responsible for the repairs of the property. So that's nice. You don't want to be hit with those unexpected repairs. So you can really project what your cash flow is going to be because you're not going to be repairing the property. And the downside is if they don't purchase the house and they have to walk away, I haven't felt good about it sometimes. Like sometimes I have to say, well, you have to go, and then it makes me feel bad because they put money down, but then again, it's their fault, right? They didn't do what they were supposed to do to buy the house, and I have to ask them to leave. And then on their exit, they're sometimes not nice to the house, and then their repairs. So don't go to Vegas with your non-refundable option fee. Put it in the bank because you're going to need it to rehab the house if they don't buy it. But on the lease option, it's nice because you get the money down. It's non-refundable. You're not going to give it back. You get cash flow. And if you set your purchase price for higher than what you paid for it, you get money on the back end. So you get paid today, you get paid monthly, and you get paid later. So you get paid 3 different ways without the headaches of unclogging the toilet.
Would you prefer owner financing though, since you do? Okay. Why is owner financing a superior option for you?
Well, everybody is different. So I know people that build their entire business model on lease options. Fine. I'm not opposed to a lease option. I mean, I'll do it again if it suits the scenario. But I like owner financing because as a mortgage loan originator, I like to look at who is really close to getting approved. You know, this is a good person to take a bet on. I call them penalty box buyers. There are sometimes people that are very well deserving to own a home, but the bank doesn't see it that way. Like they have a business. How many of you are business owners? You write off all your expenses?
Lots of business owners in the room, lots of hands.
So it looks like on paper you're not making any money, but I'll take my bet on you any day. So I would owner finance the house, get the down payment, and get a healthy down payment, 20% or 10 to 20%, and then enjoy the payment stream. And as the bank you're not going to call me, or nobody's going to call me to fix things. If you're catching on here, I don't like to make repairs.
Sure.
So don't call me, that's not my problem if your HVAC goes out. And then they make those payments. So each month that they make that payment, it reduces my risk, right? Because they're reducing my risk with each payment that they make. And if they do default, which is the elephant in the room, what happens when they don't pay? Okay, that's their fault too. And we're going to I'm going to call my favorite attorney. I'm going to call Cofield, and we're going to foreclose, and I'm going to take the house back, and now I have my asset back, and I know what to do. I clean it up and I do it again.
Sure.
So, and you can sell, I could go on.
I know. Would anyone be interested if we did, maybe jump on Zoom and did a session about notes? Yeah, and talked about notes, because you can go secure, you can take a note, you can do a partial note off a note, you can sell that note, it's, all right, would that be cool, Brenda?
Yeah, or
Set
you
that
can
up?
take a lien out on it. It's your asset. Think of your truck as an asset, and you can get a loan on it. A note is the same thing. You can get a loan on it. So if you own the note, that's your asset. So you can pledge it. It's called hypothecation. And a private investor can loan you money against it.
Yeah.
So it's an asset like anything else.
Thank you. Appreciate you.
You're
Big hand for Brenda, right?
Thank you.
If you're the smartest person in the room, you're in the wrong room, right?
Amen.
I make sure we fill this room with people that are way smarter than us. We're just the ringmaster of the circus, right? So
100%.
different choices, different options, right? But definitely notes are really fascinating. That is, both of these, the reason we're talking about these, both of these should be considered when we're talking about exit strategies. So a lot of us are at the beginning of our career, right? We're talking about building, but when we're talking about exit strategies, this is when owner financing or lease options can be really creative ways to avoid tax penalties and set yourself up for success. Danny, are you still in a building phase, or did you say you're more in a stabilization? Are you exiting out of stuff right now?
I'm always building.
Yeah.
I want it all.
Okay. No, I love it. I thought so. You're very actively acquiring, but I know you've been investing for a while, and I love having some experienced investors in there. And Sean, you're still acquiring, right? Yeah. All right. But those can be, we've heard these strategies when I've sat in some rooms with some really high net worth individuals. That's what they're doing, is they're transferring their rental portfolio into either a lease option or an owner financing scenario, so they can minimize the amount of noise that they have in managing those assets. Make sense? Cool. All right. So a couple of different ways you can do it.
Sure. Rental contracts, option contracts. Option contract normally has a date and time frame that the tenant buyer needs to perform or purchase the home using traditional financing. Because of that added flexibility with the timing of closing, you can normally charge more than the typical rent in the market. Tenant buyer will pay over market rent, larger deposit, over purchase price for the financing flexibility now.
And why might you do that, right? Because I want to be in a particular school district. I want to be in a particular desirable neighborhood, 4th and Gill, Park. Those are places that have what we call inelastic demand, right? Elastic demand is like supply and fall, like it rises and falls. There's other places like downtown Knoxville, near UT, Farragut school system that have what we call inelastic demand. Like the demand is going to be there regardless of what's happening with the economy. People are still going to want to be in those areas because it's a lifestyle move. It's not an economic move. When it's economic moves, that's when you see people, maybe I'm buying in the new construction in Halls or Carnes or Hardin Valley because I'm open-minded. I'm trying to make an economic decision, right? Not a lifestyle decision.
That's right. That's right.
Always run credit. Always check landlord references. Repeat.
Yes, absolutely. Always run credit. Always check your landlord references. You want to treat this like any normal rental when you're evaluating your tenants.
Yep.
Tenant buyers should be responsible for all repairs and maintenance as if they owned it already.
Yep. We want to get as large a deposit as possible from them. And there are a lot of people out there with a substantial down payment. I have a friend that does this outside St. Louis in Illinois. And what they found from doing this at scale was 20% of the market qualified, were able to purchase a home, but didn't qualify. So if you underwrote them, they had enough money to go buy a home, but they didn't qualify. So it's a blue ocean strategy, had no competition, and they were doing these lease options at scale.
No, it's pretty
cool. All right. Anybody got any questions? Zach.
Can you seller finance or lease option with a property that has a loan on it?
So this is the question we just asked before with Nathan. Can I do seller financing or owner financing with a lease option? I'm going to defer. Let's buttonhole him later because there's a way to do it. I do not know how to do it, and you can run into some hazards if you do it incorrectly.
Typically, this is where I would think you would just go with like a lease option route already because you're already just putting it into play.
Yeah. So that's one advantage of this is if I do have financing on it, there's nothing to. Who's renting out a financed property right now, right? Most people have leverage. They don't. So it's no different for me to do a lease option. That'd be an easy way to do it. That'd be clean. Owner financing, it's going to get into some legal wizardry that's above my. I'm not that smart. We like back of the envelope deals. We're like, yeah, this should make sense. Like honestly, I did not learn to run numbers for a long time because the deals were so good in Knoxville.
Yeah.
I was like, now you got to like pull out the pen and pad and there's some skinny deals.
You're right. Yeah.
All right. So.
But yeah, have your lender ready. Auto draft on your payments. That's probably one of my favorite things to really set up like well in advance. There's plenty of great platforms that are out there that can help you do this that will link right from bank account to bank account. So you're not having to chase people around. Suddenly they don't have the money, right? Set up your auto drafts, have it set reminder. I use Avail as my management software system. It's great. It gives reminders week out, day of, payments due, auto drafts. Really, really nice.
Yeah, and I'm going to zoom through some of these because I know you can all read slides, take a picture if you want. But essentially, one of the things Gary Keller said that I always liked, he said an agreement should be called a disagreement because it's only relevant when it has to be enforced. So just whatever agreement you're filing, whether it's a regular lease or a lease option contract, I want to have it very clear what happens if we don't perform. And spell that out and make sure it's written in a way that everyone can understand, right? Because we're going into this, we want them to perform, but if they don't, you're going to have to take that property back like Brenda talked about.
That's right.
Awesome. So what we want you to know is that the more you know about these concepts, the more, why are you more valuable to the market, Corey? What does it mean that you're more valuable to the market if you understand these strategies and these concepts?
Yeah, I have the ability to bring more solutions to the problem. I'm not just like a one-trick pony, so to speak, right? I want to be able to bring all of the options that are available to somebody, not just the one. Because like through that, I'm a big believer that the more informed the consumer, like the better for the market in general. So I'm a big fan of trying to bring people all of their options, let them make the decision and be there to support that decision 100%.
Yeah, because what I have found from running Grid now is what happens is, actually Michael's a great example, right, Michael? Michael had a deal, guy was going to be, his property was condemned. He's in senior living. Like he is jammed up and he needs an investor to come. And he came and said, hey, can we sit down? Let's talk it through. And we were able to do a deal together. It was awesome, right? Because he had some resources. So the more valuable you are when I become a resource here, the more likely someone is to say, hey, you should go talk to Ryan, or you should talk to Danny, or you should talk to Mike. They do lots of really interesting creative stuff. You should talk to Brenda. Like these scenarios that we're talking about are, if I'm lease purchasing or owner financing, are helping people out. Or I'm doing a subject to and I'm fixing someone's credit, that person was going to go into foreclosure. They were going to get nothing positive out of that. So, any questions before we jump into bringing Greg up here and talking about getting creative? Okay, Greg, you ready for your close up? Can I get a round of applause for Greg Crane? Awesome. All right, Greg, here, take the mic.
Oh boy, are you James Lipton?
James Lipton is the guy on Inside the Actors Studio. If you're
between two ferns set up.
So, Craig, who are you? Why are you up on stage right now?
I have no idea because you asked me. I want to make you happy. I've been an investor for about a year and a half now.
Yeah.
Was in the corporate world. I'm still in the corporate world, but had a bit of a transition in my work life and realized I needed, something else financially to kind of take me to that next level. And real estate has always been the thing that's fascinated me. Discovered that I really liked the idea of private money and being the bank, and became very interested in notes like Brenda was talking about. and just started jumping in and doing some private money lending. And
Yeah.
it's been
So let's talk about that journey, because one of the things we talk about a lot, like if you hang around Grid has a course, by the way, called the Income Flip. Check it out, where we walk people through what we call the 7 levels of freedom. And the first level is it's an identity and a mindset thing, right? Who among us has been an employee, has been a W-2 before, right? It is a big difference when I go out and I am self-employed. It is a radical different, like it's a big shift that I have to make. And so you went on that shift. And I think what's interesting when I talk about where you are now is there were some interim steps. And yeah, come on. It's and it's interesting that we're talking about PACE more being subject to, because was that your kind of gateway into was that like what got you interested? Like, well, maybe I could do this.
Exactly. I mean,
All right.
I came to meetings like this. I met Steve Levine. I took him to coffee, because I had an interest in private money. I had this 401k from a previous employer that I realized I could roll into a self-directed IRA and use that as some seed money, some capital to begin getting into deals. You mentioned PACE. He has this Gator Method mentorship. I joined that because I talked to Steve and he said, if you don't have enough money to lend on a whole deal, you could do this kind of Gator lending. So what the hell is Gator lending? So I went down that rabbit hole, joined his sub 2 mentorship, and really just started growing my own community of lenders and investors.
Awesome. And go ahead, Corey.
Yeah, I was just actually going to ask it. Can we just unpack that Gator method for a minute? Let's kind of talk a little bit about it for a second.
Sure, yeah. So I know I kind of bristled when you guys wanted to label me as a Gator lender, but technically a Gator deal is lending on EMD or double closing, sort of transactional funding, 30 days or less. But it's sort of expanded to be any sort of short-term kind of high return private lending.
So EMD is an earnest money deposit.
Yeah.
Double closing might be if, let's say I found a deal and I was trying to wholesale it, I might have to close in that deal and then turn around and close on it with someone else. Instead of just having the third party close on it, my C party, if I'm B, sometimes I'm gonna have to close and I'm gonna need some sort of a gap funding where, hey, I need funding for 24 hours why this thing is
Oftentimes,
closing.
investors don't want people to know how much of an assignment they'll be getting on a wholesale, so you double close it. You're closing one transaction and then selling it right away within the same day.
So with it being a method or style that you're coming in with a smaller amount of capital in general, right? Let's look through some maybe pro cons over that. Like what's a good reason about it and what's maybe some of the risks that come in with that style of
Sure. I
lending?
mean, anytime you're lending money, it's about security, right? It's like what happens when things hit the fan. So if you're not in a first position and you can't, foreclose, you're behind maybe a first position or a hard money loan, you have to have some sort of other collateral in case things hit the fan. I've been in certain deals where I probably would have been in trouble if I didn't have a lien against another property that the investor owned so that they, had to pay me out to clear that lien.
And so when we're talking about position, what we're saying is first position, second position refers to a mortgage being recorded against that property. And so the first position is the first right. So, hey, I'm owed 200K. If I go foreclose on this property, I'm getting paid in full on my 200, and then you get what's left over potentially. Right. So typically Gator lenders are someone that may be an unsecured loan. So what Gregory's talking about is cross collateralization. If you want to look more into that, is just, hey, I can take out some kind of a lien or some kind of security on another asset to protect myself in the instance that it goes
Make
sideways.
sure there's enough equity in case the deal goes sideways, it goes long,
How much capital did you need to get started?
I mean,
like on your first deal.
I think the first one was like 74,000.
74,000?
But
Yeah.
I've done things for 17,
Mhm.
20, 30. It really just sort of depends on the specific deal. And I partnered with other people, so you make a joint venture and kind of come in as co-lenders.
Yeah, I know Steven and Grindle, you work with him and Hunter in the back. We did a deal together when Steven came to town, and I had Steven we run a renovate now, pay later program. So I had control of, it was a seller that had already moved, had to sell the property. He lost his job. I've known him a long time. I had control of the lien. Steven came in and just did like $15,000 in funding for the renovation and got paid off directly on the settlement statement at closing.
That was my first lending deal, and it was awesome.
Steve, that was Steven's first lending deal, and then weirdly he got into it just from that, like changed his whole thing. He's doing this now with Greg and with Hunter. So what are you doing now? I know you've kind of gone, you said now you're trying to get more into equity partnerships, joint ventures.
I'd like to lend 30 or 50,000 to have, 25% ownership in something that could be, a longer term cash flow investment. I'm lending on mobile home flips. It's a kind of another niche that I'm interested in because it's a low entry point. There's a lot of buyers. And so I've been lending capital in that. And then Steven, Hunter, and I are doing some flips where I'm kind of the funding partner for that.
I love it. How are you securitized? Like, how are you protecting yourself on these deals?
Promissory note, personal guarantee, and a mortgage or a deed of trust on the.
So promissory note, a personal guarantee, and a mortgage or a deed of trust. And what kind of verification are you doing? Like, if I was going to borrow from you, how are you kind of determining? Is it me?
That
am I
keeps
showing
going
you?
up and up.
Okay.
Yeah. I mean, people like using private lenders because maybe they're not as scrutinizing as, say, a bank. But having had a few kind of shady deals, my underwriting and my vetting has gone up in terms of wanting to see credit report, wanting to talk to referral sources of people who have worked with this person, who have been paid back by this person, looking at their social media profile, just.
How important for you is track record? Because I notice I get some emails from you and Hunter, and it'll say, hey, this person is looking for 25,000, and they do 10 deals a year. Like they've got.
It's huge.
Okay.
I mean, having known that people know how to deal with problems, that they know how to deal with contractors, it's everything. So I oftentimes will want to talk to other lenders who have maybe done deals with them and how has that gone and what's their temperament like. I'll talk to the contractor, I'll talk to the realtor, just trying to understand the full picture of the deal.
And the reason we don't have Greg on here is here's somebody that just kind of skipped the traditional, I'm not going to wholesale, I'm not going to fix and flip, I'm not going to become a landlord, I'm just going to directly deploy capital to get a return, which is, right, that's skipping, that's the highest ladder on that entrepreneurship, right? If I'm a high performer, what am I doing? I'm trading my time, my performance for money. If I'm an entrepreneur, I'm trading my time, my performance, and my money for money. And if I'm a capital deployer, I'm a pure investor, I'm trading my money for money.
Yeah, and some deals have been great. They've made a 30% return in 45 days, doing a mobile home flip, and others I've had to foreclose on a property and take it on the chin. So it's been a failing forward sort of endeavor.
How many in a year and a half? How many deals do you think you've done so far?
I think I counted. It's been about 25 or 30.
25 or 30,
either as a lender or as a connector, kind of like what
Sure.
Steven is doing, where that's why I'm wearing the purple color versus the lender color, because that's really my, Pace talks a lot about what is your avatar and knowing kind of what your investor DNA is, and I think being a connector is where I thrive.
Yeah, well, and just out of curiosity, I see you over there, Duke. I'll get to you in 1 second. You said 25. What does that look like? Was it like 1, 2, 2? Like, if I'm looking on a monthly basis, how many are you doing a month now?
I'm trying to slow down because because you're running out of money. But but no, I want to put funds towards actually acquiring assets and building wealth long term. But because they're little $15,000, $20,000 deals, 5 or 6 at a time, which definitely keeps you up at night.
Yep. So I had this conversation that someone came in today, and I was asking kind of where they were on the investing timeline, right? And the question I ask people when they're new is like, are you going to make enough money from your primary source of employment to fund the life that you want, right? Because if I'm doing that, then we can move on to building your wealth machine. If I'm not, then we're looking at building a cash machine. Maybe I'm wholesaling, I'm fixing and flipping. This sounds like this was a cash machine for you.
Well,
and now you're able to start, hey, now I've got the cash machine going.
Yeah.
I had to increase my total capital, so now I can start deploying it and earn the right to have the wealth machine.
Like the now money and the future money.
Sure.
Yeah.
But it's important to think about when you're doing this, like, is it a cash machine or is this a wealth machine, and not fool yourself? Because you can go be a wholesaler or a flipper or something, and the money looks good until you get to the end of the year and you pay all your taxes and you realize, like, I just am another. Right? Same with like selling real estate. We've had these same conversations, right, Corey, about like, I can go fix and flip or I can go sell real estate. One has much lower liability, so that's why we sell real estate. I have very little exposure. If I don't sell a listing, I have a disappointed seller, and I'm out photographs. If I get hung up on a flip, we're in the hole like but we're going double,
Yeah,
double our
double time,
renovation,
the
double our
budget.
renovation
Yeah,
budget.
yeah.
What questions does anyone have for Greg? I wanted to have him here because it's a totally different approach. Duke, yes.
What would be so done with what you guys are talking about? And I know it covered the heavy compliance and also cost of compliance, et cetera, but not set up a REIT situation.
Okay, so Duke is asking, why would you not set up a real estate investment trust? Which is definitely above. And I would say, because I don't know how, Duke, is my honest.
Yeah.
Why not think about that?
Right.
Yeah.
Well, we're talking about learning how to set up a fund so that we have a pool of capital because
Sure.
now we have so many people knowing that we're,
You're good.
know how to lend money responsibly.
Yeah, Sean.
Yeah.
So I'm in the process right now of setting up a fund. As soon as you set up a fund, you invite the SEC to come live with you. So for what he's doing, he's light, he can move quickly, he's unencumbered. As soon as you get into a fund situation, you build a fund, you've got all kinds of reporting you have to do. There's all kinds of attorneys that get involved, and you have to do really big deals. Otherwise, the legal fees and all the accounting fees will eat up the deal.
Anytime you put capital together.
Because of the
And I
compliance,
see our attorney, Cofield Hilborn, in the back nodding his head about attorney fees. He's like, yes, no, you need to do it bigger. Like, it's going to be expensive. Like, there's trends.
How big do we have to be in order to be able to afford ourselves?
How big do we have to be to do a REIT? I don't know. I honestly, I'm ignorant on this one, so I wouldn't want to stand up here and I don't even know there's unknown unknowns on this one, like Donald Rumsfeld would say. Yeah. Who else got a question for Greg? And then we'll get, yes, Chris. Cindy, sorry.
So what factors are a hard no for you?
I think lack of experience is really a tough one, and I know people have to start somewhere, and so I say, well, come to a meeting like this and find someone who will be your JV partner and kind of vouch for you if things hit the fan. I mean, I know we're doing a couple of fix and flips, but I'm starting to sour on them just because I feel like it is a shifting market, and it's hard to know where we're going to be in 4 to 6 months. I think especially this particular 4 to 6 months could get a little rocky. So right now we're doing a few flips in South Knoxville I feel very good about, but lending in other markets.
I saw one hand over here, and I saw Zach, and we'll get Mike Cappello up here. Steven, yes. Yes, sir. You can come up here. Shimmy around so we can get you on camera.
Oh. That was very, very close up.
Hello.
I'm just trying to ask this to tease this out a little bit more, Greg. But, my first deal was $15,000. So I guess how could someone get involved in private money lending if they have 10, 15? They don't have a lot of money. How can they start getting involved?
I don't know. Talk to someone like Steven. He has lots of deals coming at him.
Okay. No, that's actually one of the reasons I did want Greg here and Steven and Hunter. They all met here in Grid, actually.
Yeah,
which is cool, and formed a business together. But yeah, you can do with partnerships some small amounts of money and get creative. Like I mentioned at the top, I'm personally looking for $50,000 for a joint venture. So if someone's got that, I'm happy to talk to one person or more than one person about that.
You talked about a REIT, but you can do your own mini fund of 4 to 6 people, and everybody put in $5,000-$10,000, and obviously you want to make good deal selection. But
yeah, I saw Travis had a question. No, Zach had a question. What's your question, Travis?
Yeah, my question is, are you looking for other people to join in your fund?
Oh, yes, absolutely. We're actually starting an investment group to bring funds together to purchase tax deeds. It's a little bit of a different strategy, but a few folks in the back and I are doing that. So, yes, a lot of different strategies for finding good deals.
Zach?
What's your typical rate of return on the double close deals?
So Zach's asking about transactional funding, like, hey, just being the middle for the double close.
I haven't personally orchestrated them, but I know the return is between 1% and 1.5% of the amount lent. And you think about it, the funds are going to escrow. They don't leave escrow. A to B closes, and then the B to C closes. So
it's almost instant money, right?
Exactly. So, it's $1,000. Well, I think Chris does double closes, but he has like a 3,000.
Anybody use transactional funding on a deal before? Had to use transactional funding? I've seen it happen where things get weird in the transaction and someone's had to step in at the last moment on a complicated commercial transaction or working with a complicated investor where it's easier just to refi back out of it than like sometimes on the purchase it's been different before. Cool. Greg, thank you so much for being here. We appreciate you. Big hand for Greg. You ready for your close-up, Mike? All right. Okay, good stuff. Pull up a chair, man.
All right,
Yeah.
sitting down?
Yeah, we can sit down. We can sit down for once. So, Mike actually runs Grid in Shenandoah Valley. So he owns, where is Shenandoah Valley in Virginia, man?
The Shenandoah Valley. It's,
Okay, I love it.
Western Virginia, I guess, northwestern Virginia.
Okay.
The Shenandoah runs all the way kind of down Virginia, but
Okay.
we kind of stick to like Harrisonburg and up to West Virginia.
Awesome. So Mike's had an interesting journey. Mike was an agent. We're on the same team. We're on a big national team called Kazi. He was an agent on that team, and it wasn't the right fit for him. Didn't love being an agent, and he came back and you run an acquisition business now, right?
Yep.
Tell us, what is Sell Simply?
Sell Simply is really our outward-facing sales and marketing business, how we market to distressed sellers to find opportunities for wholesale, fix and flip, buy and hold opportunities. And so we use Sell Simply as our cash home buyer model that we market to sellers with.
Yeah. And the reason why I have Mike here is Mike is actually doing a lot of these subject to.
Yep.
He's done novation deals, right? And gone through. And when we do those, we do them the right way with trust and with servicing companies. So we can talk about, we've asked some really technical questions. On this, you can get really technical. If you want to know some of the skinny and the details, he's done a bunch of probate nightmares. We can get into the weeds on like where you might run into some issues here with subject to. So we've gotten the question a lot of times, how do I find a subject to, or how do I find someone that's open to creative financing? So how are you casting that net?
I think you alluded to it earlier. I think if you're going at it looking for sub twos, you're doing it wrong. I mean, I've found success with sub two. With pre-foreclosure, I'm sorry, can you guys not hear me? Okay.
Right here.
Specifically with pre-foreclosure has been the majority of my sub two deals, but we've also done. I just wholesaled a sub two on market with a seller that had just bought a new construction in 2022. She had some life events. She needed to get out. In order to do that, she was going to have to basically come to the table with cash. So an agent approached me with the opportunity, and I put the property under contract subject to and wholesaled that to an end buyer as a subject to. So there's different scenarios where it works, but I've found most of my success with pre-foreclosure.
Did everyone catch that? Like, let's slow that one down. There was a property that was on market. It wasn't selling. So we talked about the more you learn these strategies, the more valuable we come to the market, right? Agent brought Mike the deal, and Mike's contribution to the deal, how he earned his wholesale fee here was he structured the subject to deal. He turned that opportunity into a subject to, and then went to an audience that was willing, because they're excluded from the traditional market, was willing to pay more. So it was a win-win. That seller was jammed up, but because you were able to come in, the seller was able to get what they were looking for and walk away. Did they walk away from the property clean?
Yeah, they walked away clean.
Yep.
And they were just able to get out of it. She just needed a way out of the situation, and that's what we were able to provide for her. But I also joined Pace's Sub-2 community in 2021, and that's really what got me started in the creative finance too. So I reached out to the Sub-2 community with that opportunity and found a buyer in Maryland, and she took it from me.
Awesome. I love that one. You guys want to walk through a Sub-2 deal? Okay. Yeah, let's take a look at this one. 52 Hickory Nut?
This was actually, I believe, the first Sub-2 deal that I did, and it's probably one of the best ones that I've done up to this point. This property came from, I believe, a direct mail piece, actually. It wasn't pre-foreclosure specific. It was a general mailing to this area that we're interested in buying. It happened that she was behind on her mortgage. This was a second property that she owned. Her her husband passed away, and it was the house they were living in, and her mother was living in another house, so she moved in with her mother and left this house basically abandoned, essentially. And so she got behind on it. She got my letter. She reached out and said, hey, I get a lot of mail, but I sent her one of these, manufactured handwritten letters, and she loved it. She was like, everybody else is just sending me generic mail, and I got this handwritten letter from you. And instantly, yeah, I know. I kind of chuckled a little bit when she said it, but instantly, had a connection with this woman, built really great rapport with her, and explained how a sub-2 could really help her in this situation. We were able to put a little bit of money in her pocket. We were able to stop the foreclosure, catch the property up, help rebuild her credit, and she was sold on it. So you see the numbers here. She had a first lien of $90K at 2%, great interest rate, obviously. Right, bang, my head goes to sub-2 when I see that. She was about $10,000 behind on it. We were able to catch that up, but the real kicker behind this deal was the second position lien at 45. And what we did with this one is I was actually behind all of this, but I talked to the bank, and essentially my pitch to them was, hey, this first position lien is in foreclosure. I'd really like to help this lady keep her house, basically. Would you guys take an offer? So I sent them an offer for $7,500 on a $75,000 second lien, and they didn't really bat an eye. I was kind of shocked that they took it. $7,500 on a $75,000 second, which really made this deal beautiful. So we paid off the $7,500 the second. We caught up the $10K. The house, you see, was in pretty rough shape. So we actually got a second position lien on this with private money. For around, I believe it was, I think we put, I want to say 60 or 75 into it. I think we had, the second was maybe 80K or closer to 100K. Private money, I think we paid a couple points up front, so we had $2,000 or $3,000 in the deal, and we're able to buy this property, fix it up, turn it into a short-term rental, solve this woman's problem, and it was a beautiful deal, great house, and
so what you did on this one, which was interesting, is formed a trust, right?
We didn't do the trust,
but you did the mortgaging. Did you LLC on this?
We put this property into an LLC. We've been doing that versus going the land trust
52
route.
Hickory Nut LLC.
52 Hickory Nut LLC. We approached the bank as a property management business. If there's any questions, it's all 52 Hickory Nut LLC is the owner of the property, which I own with my partner Rob.
So that's a really common tactic. If you put it into the property address, banks see that all the time. It's very common for an investor to go buy it in their primary and then take out an LLC in the second. It's less likely to raise some flags.
Yeah, so when I'm having conversations with the bank, I'm Mike Cappello. I'm managing the property at 52 Hickory Nut. The owner's 52 Hickory Nut LLC. And that's how I kind of avoid any sort of red flag raising from the bank. We also have insurance with the property owners as additional insured on the policy, which prevents any insurance issues if they were to come up.
And you guys hear that? So they've taken out insurance in the property owner's name, where you're named as an additional insured?
It's in the LLC's name with the property owner as additional insured on the policy.
Yep. So that way, because one issue is an insurance company can give you an issue and try to deny insurance if there was a claim if you don't have that person as an additional insured. So that's why I went through those steps to ensure that happened. And then you used a third-party servicing company on this one, right?
Yeah, we use third parties on all of our sub-2s, any of our deals that we acquire sub-2. We have the third-party servicing company that takes money from our account, pays the bank, notifies the seller, notifies us, alerts us, handles all the tax paperwork and everything. So
it's performing the same function as whoever you're mailing your payments to, right? They're collecting your payments, they're distributing them to whoever holds your promissory note, and they're issuing you statements, and there's some sort of a customer service element there.
Yeah.
So what that did had the benefit of improving her credit. So we erased those, and that property, that loan that was in foreclosure, now was repaired, caught up, and got out of foreclosure, and she's got a clean payment history. So that's become a positive trade line for her. So,
Yeah, for sure. And
Yeah.
she's eternally grateful. She calls me her guardian angel. No joke. Like, super sweet lady. But I still keep up with her too. I mean, all of these opportunities for me are a way to help people. Sub 2 is just one way that we do it. But it's a great way to help people, especially distressed financial situations. It's been super valuable for the sellers, but for us also. Obviously, we get good deals out of it too.
As an investor, how do you enter into a consultative relationship with that seller? Because that's what I'm hearing is you're doing the same thing I do as an agent, where I come in here and I'm approaching you as a consultant and I'm walking you through this process. Like, how do you do that?
Same thing. I mean, I have license. I am licensed as well, so I have to disclose that anyway. So that's always part of my upfront contract with the seller. Hey, I do hold an active real estate license. I mainly use it for my own investing purposes, but all of these creative finance solutions are just another tool in the tool belt. I think you said that earlier. I just present them. I just want to understand the problem and figure out, hey, what are the options here that we can, give this person, and what's going to ultimately be the best solution for them. Sometimes it's sub 2, sometimes it's cash, sometimes it's ultimately listing the property. But I just come at it from a standpoint of what's the problem and what's going to best solve this problem. What's the best solution going to be?
Yeah, and I wanted you to hear that because I get a lot of tactical questions about this. This is a relational strategy. Like, Mike is out here dealing with deals in probate, on the phone with these people, getting involved in their lives. I've done deals in probate, and I've had people crying in my, right?
Oh yeah, you're a therapist.
Yeah, because if you're dealing with the deal in probate, what does that involve? That involves the death of a loved one.
Yeah.
And why is this property sitting here? Often because there's negative emotion around that, right? And I've sat here in situations where that poor woman had no one else to talk to about it. It was, between her and some stepchildren, and the stepchildren kind of abandoned her. One of the properties went into foreclosure. So we sat there and really it's cathartic. She was crying, walking her through this, she needed that money to go to the hospital. She had COPD. It was rough. But it's holding space for that person and providing a solution. And then I worked with an investor in this room to come in and give them a cash offer. They had lots that they didn't think they owned, and they were going to lose in the tax sale. So I called them up and I said, hey, if I was able to talk to if I'm able to work this out for you, would you sell it to me? Could we work out a deal that would make sense on paper? And then negotiated down some liens to make sense. And they had 47 in back taxes. But if you don't like people and interacting with people, it's going to be really tough to do a subject to, because it's really relying on trust.
Yeah, there's a lot of trust factor there. And one thing you said earlier, it's escaping me now, but I forgot what I was going to say. Something you said sparked something in my brain, and then it went right out because I was actually thinking about bankruptcy still.
Probate, relational.
Yeah. What I've found is that pre-foreclosure and probate go hand in hand a lot of the times. Somebody dies, they pass a property down to a family member. Family member's not able to make the payments, and then you end up with not only a pre-foreclosure but probate to deal with as well. It can be very complex, and it's really about having the right team behind you, a good title attorney, a good probate attorney, and building those relationships. I mean, I'm not by no means a probate expert, but I've learned more about probate in the last year than I care to admit, because I've been running into all these opportunities that are just that. Somebody passes away, the property goes into foreclosure, there's all these heirs, there's all these problems, but they're also really good deals, so they're hard to pass on. So we try and figure out a solution that helps these folks out.
Yeah. Who's got some questions?
Do you have a probate attorney in this group, or is anyone here?
Tara wants to know, does anyone have a probate attorney in the group? Cofield, do you know a good probate attorney? Jessica knows a probate attorney, so Jessica can get you one, Tara.
A lot of the times, a good title company can figure out what needs to be done to get a property to be sold. You don't always need a probate attorney to go through that whole process.
I've got a good title company locally that I've used on some probate night. I have a good title company that I use on some probate nightmares.
Yeah, take it to the title company first. They may refer them to they probably have probate attorneys that they can refer people to if they need to go down that road, but
Yeah, come on up here, Cofield. If you don't know,
Get the attorney
Cofield
up here.
owns a title company.
There we go.
He's an attorney, great guy.
Just to add to that, who had the probate question? Me. You did? It actually, should I sit right here? It can hang stuff up. If you start,
Yes.
telling sellers that, hey, we need to open probate.
Yes.
That can actually put things significantly far behind. And you end up kind of stumbling on your own toes.
Public service announcement. Who has a will in here? Right? If you don't have one, please go get one. Have these conversations. Mom just passed in February. It's not fun. Luckily, Dad's around and he's competent and he's doing fine. Right?
I'll add one thing to that. It's not just a will, it's the trust that really prevents probate. So
yes,
a lot of people get sold on having a will, but a will ultimately is not going to prevent a property from having to go through probate. You need to set up the trust in order to protect the asset and prevent them from going through probate.
And if anyone doesn't know what probate is just when this property dies, it goes into like a holding pattern essentially, where the court's going to review it and make sure that this is like dispositioned according to the will. If you have set up a trust already, you've given clear legal direction, so it can bypass the courts and it can be immediately enacted. And it's private. Yes, Danny, it's private. If you haven't, then, that will's got to go through probate. And so a judge has to look at that because they want to make sure that, my wishes are being executed upon. So just something to think about, like not to be morbid, but it is really important. It's one of the most important things you can do if you're building this for legacy. And I think most people in here, if you ask them, ultimately are not doing it for themselves, right? One of the things I love, everyone know Maslow's hierarchy of needs. It's like psychology 101. You get your basic needs at the bottom. At the top of his pyramid was self-actualization, but on his deathbed, he said legacy was more important than self-actualization, like what he's leaving for someone else. So,
I did want to say one other thing, going back to the bankruptcy question earlier. And I'll be quick.
No, you're good.
I did a little homework while I was sitting over there, but one thing is that I don't recommend anybody go in and try and do a subject to deal without proper paperwork. Like, there are attorneys that you can hire that can do sub to for you. Great. If you just want to go do a subject to deal, talk to me, talk to somebody that's done them, and make sure you're protected, because that's really important. One of the protections that we have in our paperwork says that if the seller is to file bankruptcy, that they do not include the house in the bankruptcy, and they initial off on that, and we make sure that we repeat that. And another thing that PACE will tell you is that if somebody files for bankruptcy, after you've purchased a property subject to, that you can take the recorded deed to the judge, the bankruptcy judge, and he will remove the property from the bankruptcy. So that was one thing that I just wanted to.
I love it. So let's get Brenda. It's got one question, and then we'll wrap this up for everybody. Thanks for your patience.
Yes.
So you got your seller and you develop.
Come here, Brenda.
a relationship with her, and she trusts you.
Yes.
Start over at the beginning.
So you have your seller and you develop a relationship with her, and she trusts you.
Mm-hmm.
And then you put it under contract subject to,
Mm-hmm.
and then you wholesale it to Justin. How does she react to that? Or how would that person that originally trusted you
Sure.
react when they realize, oh, it's Justin that I'm putting my trust in, I don't know him?
Yeah, I mean, that's kind of wholesaling 101. For me, I'm fully transparent with sellers with exactly what my intentions are or what my options are, frankly. I don't always know if I'm going to close on a property myself or I'm ultimately going to wholesale it to Justin or whatever the case may be, but it's just transparency. It's a very upfront, hey, there's a chance that somebody else closes on this. In this case, I knew this was a property I wanted to buy, so there wasn't a doubt in my mind that I'm going to go wholesale it off to somebody. But yeah, I mean, I could see somebody being upset, especially in a subject to, if you're taking them down this whole path, building rapport with them, and then maybe at the last minute you decide you're going to wholesale it off. I think to me, that's just wholesaling 101. You have to be transparent with people. You have to tell them what your intentions are, and avoid that. you're going to end up with a really pissed off seller at the end of the day, especially if you're wasting their time. These transactions can take some time too, especially when there's firsts and seconds and all this stuff that needs to happen. Like, you got to just be upfront with people about what you're planning on doing.
1 second, Nathan. So just in the interest of time, we also said we were going to talk about novations. So here's what we're going to do. Mike teaches a free how to wholesale class every Monday at 4 o'clock. If you didn't get one of the flyers, someone hand me one of these flyers here. Cool, let me grab this. If you didn't grab one of these, Greg and Mike's contact information is on there. We'll also email out the link when we send the recording, right? But get with Mike. You can ask more questions. He's available to answer them, right? He runs a great community as well. It comes from contribution. He's in the group. For sure. Really quick, what a novation is it's an agreement that would allow you to enter into a joint venture with someone where I could come in and work out an agreement where, hey, I'm going to come in here. We're going to go repair that property potentially. And then I'm going to sell you when I've done with those repairs. So it's a way to delay those. I think we can get into that on Monday because it's a lot to unpack and I don't want to scrimp over it. And I want to leave enough time for us all to network. Is that fair? Cool. Nathan, is that a question we can ask after? Not a rush. Awesome. Fantastic. So big hand from Mike. Thank you so much for coming out. Thank you.
Yeah, man.
All right. Who's got an aha? Anyone learn anything today? No? Everyone ready to get something cold to drink and network? Say yes?
Yes.
Yes, fantastic. Awesome. So we want to connect with you. If you're not a part of the Facebook group, jump in the Facebook group. You can find deals, you can find opportunities, conversations, and we are going to have a in-person meetup on next Thursday in our office. Our office is in the Shops at Western Plaza. It's where Fresh Market is on Kingston Pike. It's the last shopping center you hit before you go into Sequoia Hills. So we're in the East Base's office there. Yep. Any final words, Corey?
Yeah, we'll be there. Look forward to seeing everybody next month. We always meet the first Wednesday of the month, so we'll be here next month. We'll be diving into the fundamentals of new construction. So I'm very much looking forward
that one's gonna be good.
to that topic. We got some great speakers lined up. I can't wait to announce those here soon. So look forward to seeing everybody then.
Thanks for
everybody
coming
for
out.
coming out. Appreciate it.